If you were watching the fixed income market last week, if that was your window to the world and that's all you could see, you would think that there was absolutely nothing going on. I think you have to go back 2 years to get this kind of boredom. Let's just look at the curve all the way from money market to capital market. I'll cut them off over here. The biggest move on money market rates was the 1 year dropping 4 basis points. In capital market land, it was the 10 year increasing 2 basis points week over week. Everything else, nothing going on. Moving over to slopes relatively unchanged week over week. If we dive into the real yields and the break-even rates, the boredom carried through to there as well. Where there was excitement is in credit spreads. Triple C now under 700 basis points, 6.9, 690 basis points on that spread. High yield down to 200 as an index, 261 basis points. IG 80. Credit spreads contracted across the board. Where do we have here? Double B contracted by about 6%, 171 basis points down to 161 basis points. Nothing to fear in credit land. No real excitement in treasury land. We got a big week coming up, and maybe everything was about waiting for this week to happen. We got 3 central banks this week. You have first look at fourth quarter GDP. You have Trump's second week coming off a Friday night where he purged a whole bunch of inspector generals. What's he going to do this week? We have February 1st looming as a deadline that he suggested for tariffs on Canada and Mexico. I don't think he's going to get that done by February 1st, but he has already started down that path. There are things that had to be done first before you can actually raise tariffs. We'll get to that. The FOMC is in 3 days, and Wednesday is going to be a busy day because you have a lot of earnings in the morning, a lot of earnings in the afternoon. You have the Bank of Canada up Wednesday morning. You have the Fed Wednesday afternoon. The very next day in the morning, you have the ECB, and then the very next day, you have US GDP. No one's expecting anything to happen. 0 basis points. And I think after the Fed, the rhetoric from Trump will start to increase. He wants rates to come down, period. He wants them to come down. He said so much, and when he was asked, do you think the Fed will listen to you? He said, yeah. Like, he just knows, and you know what he's like. You don't want this guy in your life. You got 19 people voting on the FOMC that are looking at this going, I don't want that guy in my life. I don't want him in my life. Because he'll call you names, he'll belittle you, and he won't stop. He won't stop. So, I don't expect much to happen here. We'll see what the rhetoric is after the fact. And in the press conference, I guarantee you this is going to come up. Trump's statements are going to come up. What does Powell do? Is he going to pick a fight openly with Trump? Because Trump's going to be watching it. He's going to be watching for Powell's response. That's going to be some circus entertainment there. Durable goods, 2 days. We got Bank of Canada. The expectation is they're going to cut. The last reading on CPI came in well under 2%, 1.8. And with the prospect of tariffs looming, you don't actually have to have tariffs to affect an economy. You just have to have the threat or the specter of tariffs that will begin to change behavior. There are stories of, especially in down by the Windsor area, which is heavy automotive, a lot of the feeder factories that supply the automakers have facilities both in U.S. and in Canada. And there are, I have heard stories of some of the factories in the Windsor area beginning to shift more production to the U.S. to avoid this problem. So you're already getting that happening, a move to the U.S. and even U.S. companies starting to source in different areas ahead of this. So you can just threaten something like this, and if it's believable, you can change behavior before the event happens. That's already occurring. So I do think the Bank of Canada is going to be forced to cut rates again, 25 basis points. What's that going to do to the Canadian US exchange rate? The US did weaken in the last couple of days last week because the belief is that maybe Trump won't do tariffs. Maybe he won't. I'm sort of 70% in that camp, 30% that there will be something of some degree, but I'm more like 70% that, well, he can't do what he says he wants to do because even he has to see that would hurt the very things he was elected for, get the prices down, right? So we'll talk more about tariffs shortly here. Big surprise from last week. This I did not expect. Bank of Japan increased by 25 basis points. They have been talking about their currency. They're very concerned about the weakness of their currency since they import pretty much all of I shouldn't say all of their energy, but any energy they can produce, they have to import. A lower yen makes that really expensive. This might be the easiest way to put upward pressure on the yen, but it didn't help. Still sitting at 155, 156, 157, really didn't do much. So they've raised their borrowing costs without much of an effect on the currency. I don't know that that was a wise move. I imagine they expected that they'd get a currency benefit so that, sure, they pay more on any new debt that they issue, but their import costs on their energy would be much lower, thereby saving them that much yen. The extra yen they pay in interest, they would save in another place, but that didn't happen. So I don't know that I would look for more interest rate hikes. Now, after the communication from Bank of Japan said there is more expected. If inflation continues this way, there will be more coming. But since it only raised costs and didn't have a benefit anywhere else, I'm skeptical they'll do it again. Canadian 2-year to 10-year pretty much at the same slope as the US, and the 3-month to the 10-year pretty much almost bang on with where the 3-month to the 10-year happens to be. So in terms of slope, we're sharing slopes, not necessarily sharing yield curves. Fed funds futures did have a Trump effect. When he said, yeah, he wants rates to come down, that may not affect capital market rates because these rates are set by the market, going out to the 2-year to the 30-year. But if he wants rates to come down, that will be, if the market believes that Trump will have some effect there, that's going to show up in ZQ futures, in Fed funds futures. So we went, call it 5 basis points, but an extra 5 basis points into the curve from 38 to 43. Market is now expecting over 2025 43 basis points of cuts in this distribution, which is more than 1.5 cuts, but not quite 2 cuts. I'm still in the camp of 3 to 4, if not more. Reverse repo still hanging out at the 100 billion, 104 billion. Lowest I think was 94. Reserves 3.3 trillion, still hanging out there, under a trillion of runoff before we hit 2.5. 23.4 months. I'm anticipating June, July is probably where they'll begin to end it, which will give more support to treasuries because the 15 billion that's running off will not run off. That's 15 billion a month of purchasing power. And they may begin to sell their MBS and buy treasuries. They would sell MBS not to reduce the balance sheet, but they just don't want to be in MBS anymore. You got 2 trillion there. And then they would move that over to treasuries. Week over week, TLT, nothing, right? You can see on the long end of the curve, nothing going on here. SPX up 1.74, hit another all-time high, the first all-time high for 2025. But the big test is this week. You have earnings. If earnings don't make it, I don't know that anything else will help it. You have earnings. You have the Fed. You have GDP, and you have the wild card in there every single minute of the day, Trump. what's he going to do next? Let's turn to the S&P 500, January 23rd, another all-time high. It's the first for 2025, but in a long string of all-time highs to get there. 609. IWM nowhere near close, sitting at 228. IJR also nowhere near close to their 52-week highs, but they did have good weeks. Not as good as the S&P. It was up 1.74. IWM up 1.43. The profitable ones, this is odd. This is an index of profitable and unprofitable. This is only profitable. Up had of the three, the lowest, up 0.91. I'd expect IJR to outperform IWM, but here we are. Forward 4-quarter operating earnings 273.17. Basically unchanged from last week as well. The closing SPX was changed, 6101, so we're back above 22, or 22.33 times forward earnings versus 21.95. Of the 78 companies that have reported so far, we have a surprise factor of 8.6. That means operating earnings coming in 8.6% above where the expectation was. Does that continue on? Usually it starts off very high and then it drifts away, that you end up with somewhere around 3, 4, 5% a surprise factor. Implied volatility disappearing as well. 13th week, we're at the 33rd percentile on S&P 500, 25th percentile on TLT. Have a look at the open interest though. This tells a different story. We went last week from 2.33 puts for every call to 2.7. With volatility dropping, insurance becomes cheap. Put buying becomes cheap to do, and there was an increase in it as the market went up. And from day to day, the market just didn't seem to have the same energy. Last year, when it kept hitting all-time high after all-time high, there was a feel to the day that it was just, that it was solid. These have been not that great. I think the market is sort of tired at these levels. To really push to newer highs, I think you need two things to happen. If we really think that, well, we've got a lot of upside here, we need, I think, two big things to happen. Number one, you need a bull flattener on the long end of the curve, and it doesn't have to be much, but even 25 or 30 basis points. It doesn't have to come down 50, 60, but it just has to be coming down. That would be supportive of present values of cash flows, which support higher prices today. And number two, the uncertainty of tariffs has to go away. That if he comes out and says, okay, Canada and Mexico are doing a lot on the border and fentanyl, let's not worry about tariffs. And with China, if China can put pressure on Russia to end this war, if they can get that done, we can start talking about keeping whatever tariffs are in place. We'll just leave them unchanged. We won't add any more. But China probably has more influence with Iran, North Korea, and Russia than the U.S. does. Maybe you need them to get something done for you and you're willing to trade off on something. We'll see what happens. But if you can get clarity on tariffs for at least a year or two, and get some easing in the capital market, I think that could be really supportive of equities. If those things start happening, where you start seeing the long end of the curve coming down, clarity on tariffs, I think I might not be as aggressive on shorting IWM as I am. I'd still be short, but I'd pull it back. But that's what it would take, is to see that bonds are getting a bid, and you have economic clarity on the tariff front. For earnings, LSEG 103, sectorspider.com 99, and I think that's about the best. It's about the best we're gonna get. They're close. We'll just say, hey, they're within 10% of each other. Victory, great on this simple little thing that nobody can seem to do. Sector Spider is just missing a bunch of stuff on Monday. that is over here. Sector Spider doesn't have AT&T reporting on Monday, and AT&T reports on Monday. Let's have a look at who's reporting earnings, and then we'll continue on with a discussion of tariffs. Let's start with Monday. AT&T in the morning, 8:30 a.m. So if you're in AT&T now, while there is no chance to get out, you're going to get results on Monday. Verizon was pretty good. Increase in wireless subscribers and a price increase. I expect that it wasn't just Verizon specific, but should fall through to AT&T as well. And for those of you who follow Supermicro, they're on the 25th as well. Sorry, the 27th. Let's go over to Sector Spider. For the rest, we'll go over to Tuesday. And let's put these in order here and see what we have. For industrials, Boeing, that'll be interesting. Not much in technology. For staples, AMD, Kimberly-Clark, Cisco. Boston Properties in real estate. Let's see how the office market is doing. Class A in gateway cities. And we have General Motors. I want to hear their guidance and what they have to say about the tariffs and the uncertainty of tariffs. I'm sure that's going to be an analyst question. And Starbucks, are they turning it around? The 28th, lots of exciting things here. There's T-Mobile and Meta. For financials, what have we got in here? Raymond James, NASDAQ. In industrials, anything exciting? Elevators, if you want to watch that. Nothing too much exciting that I watch. Microsoft, Qualcomm, Western Digital, Lam Research, IBM, ServiceNow, big ones. And Tesla, after the bell, Tesla. So Wednesday, this is Wednesday, by the way. So Wednesday, you have Bank of Canada, you have the Fed, you have T-Mobile, you have Meta, you have Microsoft, Qualcomm, IBM, ServiceNow, Tesla. That's one big day. One big day. Let's look at Thursday, 40 components the next day. Let's see if there's anything exciting. Comcast, cable is just not doing very well. For energy, Valero and Baker Hughes. Blackstone, this is interesting. MasterCard and Visa. MasterCard and Visa at the same time. In industrials, CAT, Southwest Airlines, UPS, going into technology, Intel, what are they going to say? And there's Apple. Things haven't been good for Apple lately. Well in correction territory on their price. China hurting them. Cigarettes in the staples. That's a staple, by the way. Cigarettes. By the way, you know what else is in staples other than just cigarettes? Soda pop and beer. Oh, and chips. Soda pop, beer, chips, and cigarettes are consumer staples. I just want you to just reflect on that for a moment. Do you think that you need a Make America Healthy Again campaign? Paper company, Weyerhaeuser. I say paper, probably more timber than paper. Actually, I think they sold off all their timber REITs, right? I can't remember now. Maybe somebody else knows. I'll have to look into it after I'm finished here. Amazon, Pulte for the housing market. And Friday, this will all be before the bell, obviously. Charter, follow on with Comcast, Chevron, Exxon, Phillips, lots of energy at the end of the week. I wonder what their guidance is going to be as far as CapEx in the U.S. with Drill Baby Drill. Are they in on it? There's going to be some kind of question, I'm sure, about that. Do you see yourself drilling more? Does any of these policies encourage you to drill more? Something along those lines. And there is our earnings week. Let's just briefly touch on the state of the housing market in the U.S. Look at where mortgage rates are, 6.96 on the 30-year. On January 16th, it breached over 7%, 7.04, just back over here. October 26th was this was 2023. This is when rates were or yields were topping out, the market was bottoming out. You had a mortgage rate of almost 7.8%, and we're trying to peak over 7%. If you just go back through time, you're getting all the way to the early 2000s to have rates over 7%. That's 20, 24, 25 years. And I've drew 3 lines here. We could just see the length of time at which mortgage rates, and we're looking really at the blue line, the top line here, that's the 30-year fixed. The amount of time it spent below 5%, the amount of time it spent below 4%, and the amount of time it spent below 3%. So if we expect an increase in mortgage activity with all of that lock-in at significantly lower rates. Now, this is not mortgage activity. This is just mortgage rates. So, if you had got your mortgage at these levels, by the time it got down to here, there's probably a lot of refinancing going on. You have a lot of lock-in. So at these high mortgage rates, even though there is housing activity, people are buying houses. They're just managing the price of the house. Most people don't really look at the mortgage rate and the price of the house. They look at their monthly payment. So it's a combination of the two that settle down to, well, what is my monthly payment? What is my cost for insurance? What is my cost for property tax? Now, insurance and property tax have also been going up. Insurance quite a bit, but insurance and property tax have also been going up. And you have elevated mortgage rates and housing prices that haven't really come down because of the amount of underbuilding that we've had for a while. We still have a structural shortage of housing, but we also have an inventory shortage in that all of the mortgages that were done below 5, below 4, below 3 are being held. I'm not selling my house at a 3% mortgage because if I upgrade to another house, the delta is the same. Sure, the market, I can get so much for my house now, but I'm going to have to pay so much for another house. If I go to a bigger house, a new mortgage at 7%, I got 3, I'm going to sit tight. This over here is from Wall Street Journal. U.S. home sales in 2024 for all of 2024 fell to the lowest level in nearly 30 years. You got to go back to 1995 to get housing sales below what they were in 2024. 4.06 million, and in 1995 we were below 4 million. That is 29 years that you have to go back. So it didn't, I guess the headline wouldn't have read very well saying lowest level in 29 years. You got to say nearly 30 years, right? Why not round to the nearest 50? In almost 50 years, and then in brackets rounded. Anyways, this is far more interesting if you control for the population. You had just under 4 million homes sold when the population was 266 million. Population for 2024, taking the 2023 estimate and applying a growth rate, you get to about 337 million. That's not counting anyone in the country that's there illegally who's not being counted, but 337 million. It's a 26% increase in the population. You would expect a 20%, about a relative increase in the amount of home transactions, up 26%, and it is flat. Even though you have 26% more people, houses turning over are flat from 29 years ago. Just to sort of put that in perspective of how bad it really is, that even if you had growth over that period of time to match the population, you'd still say on a per capita basis we haven't changed. But here on a per capita basis, it's a significant decrease in housing activity. Okay, let's have a look at week 1, the executive orders. We're not going to look at all of them, just the ones that really relate to trade, business, tariffs, the economy, things like that, the federal deficit, anything that would affect either the equity or the bond markets. I did these screens Friday night, And then Saturday, as I cycled through the regular podcasts on YouTube, I noticed that, oh, everyone's talking about it. Now I'm going to look like I'm copying everyone else. But I did mine before I saw all those. But it was a big story this week. It would be unrealistic to expect that nobody talked about it, but we'll go through this. What we should do first is understand how the president can invoke tariffs. The president cannot. Why did he not do it on day one? Can't. You can't do it on day one. You need a reason. And these are the 4 reasons that you could have: national security, unfair trade practices, alleviation of a trade imbalance, or a national emergency. For the first 2, national security and unfair trade practices, require some sort of study. With that in mind, we'll look at one executive order, and it'll make a lot of sense when we see that executive order of, well, why just do that? Why not just do the tariff? Because you have to do something first. You need some sort of study. To put tariffs on for national security purposes falls under Section 232 of the Trade Expansion Act. Unfair trade practices, Section 301 of the 1974 Trade Act. This is probably your easiest way in. The alleviation of a trade balance, Section 122 of the Trade Act. However, it's temporary. It is limited to a certain number of days, and then it's over. If you want something more permanent, you pretty much have to get it here, unfair trade practices. It's going to be hard to argue for national security across the board tariffs for national security. That's going to be a tough one to do. This is the door in right here. Now, unfair trade practices, you start a study looking for unfair trade practices. It's sort of like a crooked cop saying, I'm coming in to look for evidence, and I can assure you there will be evidence. You put enough lawyers in a room, you're going to find unfair trade practices. Even if there's nothing going on, I can assure you there will be unfair trade practices. It's just a formality that we have to go through before we accuse you of the unfair trade practices. But accuse you, we will. And there's also National Emergency, 1977 International Emergency Economic Powers Act. I'm sure you've heard the term IEPA. I think this is probably a dead end, and national security is probably a dead end. This is probably your best way in, because you can make any argument, right? So let's look at what has been done. All executive agencies tailor policies to reduce consumer prices, and progress reports every 30 days. Well, okay. I mean, it's a step in the direction of at least getting people to and agencies to look at what they're doing. Tailor your policies to reduce consumer prices. I don't know that that's going to have an effect, but okay. It's better than just ignoring it. It's a statement at least. It's like, look, can you do this while you're doing what you're doing? Can you have an eye towards this? I don't mind that. Here's the one that lines up with this. Treasury and Commerce Secretaries, plus the U.S. Trade Representative, to examine causes of U.S. trade deficits, identify unfair trade practices, and like I said, they'll find that. Make recommendations with an eye maybe towards a global supplemental tariff. This is what has to be done before you can invoke Section 301 of the 1974 Trade Act. So if you saw that executive order and you said, oh, well, they're just examining causes. He's just, rather than putting tariffs on, he's going to say, look, I kept my promise. We had to do this. We found nothing. That might be his way out to say we found nothing, but finding unfair trade practices, it's like planting evidence. You will find something. Okay, continuing on. He wants to begin the review of the U.S.-Mexico-Canada trade agreement, hopefully renegotiated sooner than 2026. And no executive order has been issued related to Canada-Mexico tariffs yet. But as we said on the previous screen, for unfair trade practices, there has to be some sort of study. This is the replacement of NAFTA. This is the agreement that the Trump administration, because NAFTA was a disaster, worst deal ever, whereas the U.S. MCA was the best deal ever. No one ever thought it could get done. Everyone's talking about it. It's the most beautiful deal that was ever done in the history of presidents in the U.S. uh, and now it's a piece of garbage and it has to be redone. Interesting. Review of trade with China. Again, this is part of the studies that need to be done. With an eye towards new or increased tariffs. Review of fentanyl flows from Canada and Mexico. Most of it coming from Mexico, but hey, Canada, let's not let you off the hook. There is quite a bit of production of fentanyl being done here. I think in the last couple of weeks, a big super lab in Vancouver was dismantled with tons of what was it called, premix? I don't know. There's a word for it, pre something or other. That these are the stuff you need to make the fentanyl. Pentagon may deploy 5,000 troops onto the southern border from two of their top divisions. I think the 110th Airborne and something else. I guess it's the forces they keep on reserve, not on reserve, but on call, or ready to deploy in critical situations if necessary, if it shows up, and to deploy them on the border. And this may increase up to 7,000. There's already 2,500, I think, National Guard that is deployed. So that's going to stop a lot from coming in. Suspend U.S. participation in the global tax deal. That sets a minimum corporate tax globally. Pause the U.S. ban on TikTok for 75 days. I think this makes sense. The reasoning here, I think, is pretty straightforward, that with the ban, the U.S. version of TikTok is worthless. Well, why make something worthless when you can get something for it, right? Why make something worthless? And I think that's what he's looking at, saying, look, let's pause it for 75 days. And he's already setting the stage that the U.S. government should get something out of this. He goes, if I don't extend it, it's worth zero, right? So obviously, 50%, there should be something around 50% for the U.S. I think he's angling for the U.S. government to get something out of that. I'm not sure. But yeah, why not extend it? Why not get some value out of the asset than just make it worth zero? Governments make things worth zero too often. I agree with that. I also agree with this next one. Ban U.S. government officials from forcing or pushing social media companies to ban, and I put in brackets, misinformation or disinformation. If you say that gravity is 4.7 meters per second squared, well, that's misinformation. We can all agree that's misinformation. But in the social realm, what is misinformation? It has grown to become information or statements I don't agree with. So if I don't agree, if your statements don't match what I already agree with, that's misinformation and disinformation. I mean, the lab leak was called misinformation and disinformation, and I think in Friday's Wall Street Journal or Saturday's, the CIA, or it was Barron's, I think, the CIA is saying, yeah, we can't rule that out, is giving a lot of credence to the lab leak now. So I agree with that, because, if I have a certain ideology and I say, let's say that I was the president as an atheist, and I said to social media companies, okay, you got to stop all this God talk. Anybody talking about God, you got to stop it. That's misinformation, and it's keeping people in the dark ages. I mean, from my perspective, right? So I agree with that. Like, who is the arbiter of what's right? Just to give you an idea of what I mean here, I watch Real Time with Bill Maher every Friday night. I like the guy. I like his just straightforward approach about things, and he's not afraid of any guest. If a guest says something that's nothing but a platitude, he pushes back on that. I mean, I've seen him tell people on his panel who are running for office, you're not going to win. You can't win. You're not going to win. He tells them right to his face, so I like that. The actor Jesse Eisenberg was on. And Jesse Eisenberg had played Mark Zuckerberg in the social, what was it called? The Social Network, the movie The Social Network. Right at the end, He says, he doesn't understand all these billionaires. He says, if I had that much money, I would spend all my day doing good. Why are they not doing that? Why are they doing what they're doing? How come they're not spending their day just doing good? Well, you see, his perspective is he thinks they're not doing good. Like when he said that, my thought was, yeah, but whose standard? By your standard, they are doing good. They're advancing technology. They're creating employment. They're connecting communities. They're contributing to the tax base of the country that they're in. They're enriching shareholders, and how many pension funds are holding on to their stock? How much value is being created in growth funds, in pension funds, in tax accounts all over the world? They are doing good, just not your definition of good, right? So this is why I agree with that statement, is because, well, from whose perspective is it? So yeah, I agree 100% with this. Moving on to federal workers, DOGE is under the office of the president to July 4th, 2026, which is the 250th year anniversary of the U.S. from 1776. Each agency head must establish a DOGE team of at least 4 people to work with Elon. Federal hiring freeze, however, not related to immigration or border enforcement, not related to the U.S. military, and hiring still allowed to maintain essential services. Along with the hiring freeze, no contracting with outside labor is a workaround. A return to office mandate. And conduct a review with an eye towards making it easier to fire or demote federal employees, and this is targeting specifically SES employees, senior executive service employees. All federal DEI officers on immediate leave pending their elimination. Not a review, pending their elimination. The review is done. 60 days to eliminate all DEI programs. And every week, 1 or 2 companies are coming out saying we're ending our DEI efforts. All of these companies, these universities, governments staffed up their DEI departments for this social wave that was going through. Sometimes there was buy-in, other times it was just fear that if they don't do it, they'll be called out. So they pretty much had to do it. Now they're all being dismantled. All those people are being released back into the marketplace. So perhaps now the Starbucks might find it easier to hire. So there is going to be some downsizing across companies, across governments related to this, to dismantling this DEI. Moving over to energy, he declared a national energy emergency, which may involve federal use of eminent domain. Eminent domain is you have land, we need that land, we can take that land. Eliminate Biden policies aimed at encouraging electric vehicle development and adoption. I wonder how that's going to affect Tesla sales. In countries that have eliminated government subsidies for electric vehicles, sales of electric vehicles dropped not a little bit, but significantly. The credits have run out in Canada as well, and I read over the weekend that Tesla increased prices in Canada by $9,000. Now the currency is much weaker, so on a currency adjusted basis, maybe you needed the $9,000 to get it done, but increased prices in Canada by $9,000 from $55,000 to $64,000. I don't see how that's helpful for sales at all. 30 days, all agencies to submit plans to eliminate regulations deemed burdensome to domestic energy production and consumption. Particular attention to oil, natural gas, coal, hydropower, biofuels, critical minerals, and nuclear. Rescind, revoke, revise. I don't know if you could put any more words in here. Revise, amend, defer, grant exceptions from any and all regulatory actions in the state of Alaska related to fossil fuel extraction. Anything gone. The Outer Continental Shelf is now ineligible for wind energy leases, or at least according to the executive order. A few others here. Pause all foreign aid. 90-day review period. There are exceptions here, except military aid to Egypt and Israel and temporary food aid. Out of the World Health Organization, stop all funding. It was like 500 million a year, 525 million a year. Remove guardrails on AI, which segues into this interesting bit of news. Well, I don't know that it's news. It's like a month old, but I saw a 1 hour discussion of this on CNBC, so I went snooping around and looking for it, and I went to find the research paper. It's incredible what they got done. Chinese AI startup DeepSeek is competing with Silicon Valley giants. $6 million to develop, and that is just measuring the raw computing power. 2,000 chips to train versus 16,000, and they use the H800 because there is a ban of the H100s and the higher end performing chips going into China. This is a good example of why complexity theory works very well as opposed to linear thinking or model thinking in terms of how a policy is going to have an effect. The belief was that if we cut off supply of advanced chips to China for AI, we can continue to keep the lead. But what that does in China says, okay, well, what do we do now? It's not as if they're just going to take it. They'll find workarounds. They'll find creative ways around it, and they did. Not only that, made this open source. This is a huge threat to the billions and billions that are being spent by the large companies. You get a startup, well, I wouldn't say a startup, but a company like this that didn't use the latest technology and only spent $6 million and developed a model that is challenging these. We'll have a look at the paper, at their research paper shortly. And since they publish everything and it's open source, anybody can take it and test it against the other models to see if it's true. The company built a cheaper competitive chatbot with fewer high-end computer chips than US behemoths like Google and OpenAI, showing the limits of chip export control. The performance of the DeepSeek model raises questions about the unintended consequences of the American government's trade restrictions. The controls have forced researchers in China to get creative with a wide range of tools that are freely available on the internet. Let's have a look at the paper. Let's see if I can find it here. There we go. This is the New York Times story. Here is the paper itself. Let's just scroll up here. And here we'll look at this chart here for the presentation of their performance. And this over here is DeepSeek version 3. The blue beside it is the version 2.5. And then there's a bunch of different tests. These are itemized later in the paper as to what each of these are. Some are language models, some are reasoning, some are math. And this one clearly here is math. Look at this over all the others. Put it up against Llama, ChatGPT-4, and Claude. This is probably the most interesting part. Training costs in H800 GPU hours, 2.6 million hours pre-training, and it costs in US dollars 5.3 million to get that done. Context extension 238,000, post-training 0.01, total $5.576 million. Isn't that incredible? And if you want to know what they provide everything here, it's all open source. I can't even begin to tell you what these things mean. But if we scroll down, we'll get to the discussion of what they train it on. Multi-subject, multi-choice data sets, language understanding and reasoning data sets, closed book question answering data sets, reading comprehension, reference disambiguation, I'm not sure exactly what that is, language modeling data sets, Chinese understanding and culture, math data sets, and code data sets. So we have all of the, there's DeepSeek version 2 and DeepSeek version 3 versus some others. So if you want to read the paper itself, you can just Google DeepSeek technical report. You'll get the white paper if you're more technically inclined and want to read through it. Now, as I said earlier, I don't understand all the technical stuff in this. But I don't understand all I don't understand any of the technical stuff in this paper. It's way beyond me. But I do have to ask the question that if you can get this done for under 6 million on a much older generation chip and fewer of them, what does that mean for the future of NVIDIA and for the future of hyperscalers if you are an AI startup in Silicon Valley and you could simply take this as your starting point, because it is open source. You take this as your starting point, and if it's open source, you have a whole community of people who are adding to it and working on it. You could probably get to scale cheaply with fewer employees, without all of the investment in all of the hardware and infrastructure that you would need. The paper itself, I think, there it is right there, the 27th of December 2024, but it does take time from the time it's posted to get outside of the community that it lives in and get more market exposure. The New York Times story on this is where are we here? It should just be under here, January 23rd. And the CNBC story was also January 23rd, which was Thursday. I didn't see much market reaction. I didn't really hear anything on Bloomberg that day, so maybe it just hasn't gotten around yet. Why it's not talked about a little bit more, I don't know. Again, I don't know the technicalities of this model. But it does seem to me like this is something that you'd look at and say, oh, hang on a second now. What's this going to do to NVIDIA? What's this going to do to ChatGPT, to Facebook, and companies like that? Something to keep your ears open for if we hear the name DeepSeek again and again. We have to think about the effect. And that is it for the week.